Hi there, welcome to the Tradescores market analysis for December 7th, 2010. I'm going to be using the Tradescores.com website. Everything that I show in this video is free for you to use. What is perhaps the best tool for people who like to follow charts is our Chart Watch tool, which is what I am in now. I have created a watch list that I call the Market Minutes, and in that watch list I have 12 or 13 different charts. I am viewing them right now in the gallery view, which basically allows me to have a number of small little thumbnail sized charts, and if I click on any one of those I can increase them in size and do my analysis. So it's a quick and easy way to look at a multitude of charts, whether it's stocks in your portfolio, whether it's index charts, that sort of thing, whatever you like to use. Alright, so let's get started with the analysis. I'm going to begin by looking at the Dow 30, which is what I often do. And today was an important reversal day. On the news of the Bush tax cuts staying, which is what Obama announced yesterday, we basically opened gap up today, coming into resistance at the highs from earlier in November, and I'll just draw a line there so you can see that. And of course we would expect to see some selling pressure at that price level because that was an old high. Now, anytime a market opens strong and closes weak, that's often a sign of reversal. And so my expectation is that we probably will move lower in the next little while. What will be important to watch for is whether we break through this support area down here, or if our pullback maybe comes down above that level, essentially forming a rising bottom, and then we basically start moving up like this. Now, it's important because if we form a rising bottom, then the buyers remain in control of the market, and we're simply going through a consolidation phase where the market builds a base. If there are rising bottoms, then it is an optimistic base, and that typically leads to a breakout, perhaps sometime in January. However, if we were to come down to the very lows, which would be the lows of just a short, like maybe a week ago, right around in there, or if we were to actually go through those lows and penetrate that support level, well then the picture is somewhat different. It's not an optimistic pattern anymore. It becomes either a neutral pattern or a pessimistic pattern, depending upon whether that support level is broken. So in the very short term, I think there's a good chance we will see some selling pressure over the next few days as some money comes off the table. I lean toward siding with the long-term trend, which of course is up. And any time a trend is up, we want to stick with that trend. And so a pullback into here doesn't necessarily break the upward trend line. It's just a sort of a pause in that longer term trend. So short term, be cautious, but longer term, remain bullish on this market. The next two charts that I want to look at are the other U.S. major indexes, the NASDAQ 100 and the S&P 500. And they too did that important reversal today where they opened strong and finished weak. But unlike the Dow, they actually moved through that resistance level. And that's one of the reasons why I think the market is more likely to continue its long-term upward trend after a little bit of profit taking. When the market is able to break through resistance, even if it's just for half a day, it signals to us that the buyers had a little bit more strength than we would expect. In other words, normally we would expect the market to get stuck at that resistance level, and it at least made that attempt to break through this morning. Now, the Dow didn't, but remember that the Dow is only 30 stocks, whereas the S&P 500 is 500 stocks, and the NASDAQ 100 is 100 stocks. So again, we have some confirmation here that in the short term we will see some profit taking, but beyond a week or two, this upward trend should continue. The next chart I want to look at is a chart of the US dollar, and here we have that. And you can see that today the US dollar opened weak but finished strong, and that's much of the reason why the stock market went down, because of course when the US dollar is strong, US dollar denominated assets like stocks or like many commodities get more expensive, and that caused that little reversal that we saw in the markets. Now it's also worth noting that the main commodities that I like to look at, which are gold and oil, had a good reversal day as well. I don't know if it's good. I mean, if you're bullish, it's not good. But gold opened at a new high, closed weak. So it's probably going to pull back. Much like it did back a couple of weeks ago, expect that we're going to see a pullback here. However, really, we're just kind of building a ascending triangle pattern, which is a good pattern. And we pull back for a few days, we bounce. What we're really doing is building a nice base for the market to launch off of in the future. So don't think that this is necessarily a bad thing long term. It's actually shaping up for a good long-term pattern. Just expect that in the short term, the next few days, we'll see some weakness. Here's the oil chart, and it too has had a pretty good run higher in the last little while. It has reversed today, opening strong, closing weak, and you can see that it sort of hit that line of resistance. We have what's called a rising wedge forming here, which means that the bottoms are rising quicker than the tops. That's a sign often that the buyers are getting tired, but I'm not too worried about that at this point. I think that in general, oil looks pretty good, not great, but pretty good, and aside from some short-term profit taking, we should be okay. Now, what that did, the weakness in commodities was, of course, hurt the Canadian markets, and first we can look at the TSX Venture, which is giving what we call a bursting bubble pattern. So a bursting bubble candle means when you have a very strong upward trend, and this one has been incredibly strong, probably the strongest, one of the strongest markets in the world. It is like this right here, where you get a day where it opens on a new high, closes weak. We're getting that again today, and that typically means that we're going to see a pullback in the short term. I am concerned that this leg of the upward trend wasn't as long as this one, but if you talk about Elliott wave, basically you've got another wave to go higher here. In terms of 5 waves up, 3 waves down. I'm not a big believer in Elliott wave, but it's something to think about for the TSX Venture. Last chart I want to take a look at is a chart of the TSX itself. Symbol there is T.XIU, and this has been a good performing market in the last little while, certainly outperforming the U.S. market as it moves to new highs, and the U.S. market has sort of lagged in that regard. And we have a good upward trend. We really ran away from our trend line, if you want to think about a channel like that. So a lot of signs here that we're going to go lower in the next few days, and it's not necessarily a bad thing long term, just in the short term expect some weakness. So that has been the market analysis for Tradescores and StockScores.com. For more information on the things that we do at Tradescores, take a look at www.tradescores.com. There's a whole bunch of free tools there to use and the fun game to play to improve your trading skill. And if you want to learn about scanning the market and learning how to trade the market, please take a look at StockScores.com, which is www.stockscores.com. Have a great week in the market and trade well.